Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Unless you live under a rock, you probably heard of everything to do with AI in the last few months. So since ChatGPT came out, there are so many news out there, including the big boys, the big news companies like the Skies, the BBCs, the Financial Times. Everyone is getting involved, and you'll see this sort of article wherever you are. If you're watching just normal news right now on Sky News, you'll probably see this. If you are going on Financial Times, you will see this. You will see this in The Guardian, for example, as well as this on the BBC and so on. Now, all of these articles, a lot of them are either negative about the whole AI situation, or some of them, they'll tell you what it is, but obviously they won't start warning you, and obviously what's happening in the US and the fact that the ChatGPT CEO has been questioned about the dangers of AI and what it's doing and so on. In the meantime, there are investors who are now trying to do two things. One, they're speculating or telling us basically what stocks we should buy, the ones that go into the moon and so on. And there are obviously people that are benefiting, the big boys, the hedge fund managers, obviously benefiting from and knowing the type of companies that have already invested in this, okay, the ones that they know will make good money in the long run, and they are still investing in it already. So we have two options: either follow the hedge fund managers who actually possibly have a kind of, they know exactly what these companies are doing because they invest in billions of dollars. So the companies kind of will give them some information, which is not fair, but obviously they do. We all know that. Okay, so there's an inside job kind of thing. Or the speculators, people that are going to tell you on Reddit, for example, that are going to tell you there's a new shiny AI company that's going to go to the moon tomorrow. They're going to come out the next best drug because they have now AI basically in their systems and all of these things. And we really need to be careful. Okay, so what I'm going to do today is I'm going to give you 5 different companies that you could potentially invest in. Okay, I'm not going to tell you to do this, but potentially you can invest in, knowing that these companies are not the speculative companies. Okay, they have proven to people that actually are profitable businesses. And then I'm going to give you one that is potentially kind of speculative but has been around for a bit. Okay, so before we start that I just want to talk about what generative AI is, and that's something that you probably have seen in the last few months. So according to ChatGPT, generative AI refers to the category of artificial intelligence techniques that involves the creation and generation of new content such as images, text, music, or other forms of media. Unlike traditional AI models that are primarily focused on recognition and classification tasks, generative AI models aim to produce new and original data based on the patterns and examples learned during training. AI basically is a software that you give more data to, okay, and the more data it has, the more it learns, okay. The more it learns, the more it can give us, more information it can give us, and so on. So that's basically what it is in a basically dumbed down version, or in a nutshell, for example. So all of these things that we basically are coming up, all these companies, for example, Microsoft, for example, right, recently came out and said their Office package will include now basically some sort of AI. That's generative AI way, but they will be basically in terms of images, in terms of text, in terms of your presentations. You give the title basically, and it will write these things for you automatically, which is quite good to use. And right now, if you go to their website, you will see everything to do with AI, right? So the original Microsoft Office is now included, basically, that has now some sort of AI that allows you to create presentations. You give the title, it does a lot of the job for you, okay? So there's so many companies out there that are saying, oh yeah, we're doing this or we're doing that, just to kind of impress you. So let me show you the 5 companies, and then you make your decision based on what you want to do. Some of these companies have already come out in terms of their earnings and so on, and they said basically what they are going to do in terms of AI and how the AI is going to help them increase their business and so on. Because remember, in the end of the day, we don't really care about AI or whatever. What we really genuinely care is this going to help the company actually make more money? And if it is, for investors, that's all we're interested in. If you have not joined us on the Patreon account, please do so. It really helps. And then once you're in there, you can download all the spreadsheets that I use. Okay, just to make a copy for yourself, sign up, make a copy for yourself, and you can use it as much as you want. And as a bonus, obviously, we have the Discord community that we're trying to build, brothers and sisters, like-minded brothers and sisters who will InshaAllah help each other, obviously. So let's get started and look at these 5 companies. So what we're looking for is the ticker, the company name. We're looking for the market cap. If it has a moat or not. Price, we're looking for trailing PE, so that last 12 months. We're looking at the forward PE based on the analyst expectations. We're looking for the PEG ratio, so anything above, below 1, that's what we're looking for. Revenue growth in the last 5 years, so the compounded annual growth rate for the last 5 years. We're looking for current ratio, which kind of helps us to know if the company is in debt, is basically able to pay off its debt in the next 12 months, or liabilities if you like. We're looking for the profit margins and return on equity, which actually is extracted from Finvis, which is a website that I use to extract information from. Free cash flow, any free cash flow the company has is actually bonus, especially this type of businesses. Total revenue in the last total return in the last 10 years. So the company, if they have been around for that long, how much have they returned to shareholders? Next year in terms of earnings growth, and then next 5 years for basically years and every single year. Morningstar valuation and the fair value. Right, let's start with the first company. So this one is no surprise. Okay, they are using AI left and right, and they were one of the first companies basically that come out and said, you know what, we are using AI, this is how we've been using it. They have been talking about it for a while as well. So Nvidia, for that reason, is almost up, I think it was like 100 something% since January, I think. 773 billion market cap right now. It has a wide economic mode. $312 per share is basically where it's at. Trailing 12 months basically PE is 170. Forward PE slightly seems cheaper, so 68. PEG ratio above 1, 3.55, and revenue at basically it's great. Current ratio, okay, so and the current ratio is about 3.5, which is good, so they have enough to cover their liabilities the next 12 months. Profit margin, return equity is excellent. Free cash flow, $3.8 billion. Total return in the last 10 years, we're looking at about 55%. Let's call it 56%. And this is probably one of the reasons why this company is trailing basically at higher multiples, genuinely. Look at the next year growth, 34%, and then 21% after that. Right now, it is so expensive. It's 56% premium right now. 200 is where the price should be. Right now, it's 312. So for this company to be on my short list, right, on my watch list, if you like, it has to come down below 200. And we've seen it. Okay, we have seen that, but it's gone up so much, it's ridiculous right now. So they are one of the companies in terms of GPUs and so on that has come up very on and very early and said, you know what, we're using AI, we have been using it, and this is what we're doing. Obviously, there's no surprise Microsoft made the list, basically this list, because of ChatGPT and the fact that they have investment in there, the fact that every software they own right now in terms of their cloud as well as the software, the Office package, they are now utilizing AI, which is really good to see for this company. And again, is them and Google, obviously they're basically are fighting over who's going to take the lead or so on. So right now, $2.37 trillion market cap. It has a wide economic mode. $318 per share is where the price is at right now. PE 34 is so expensive right now. Forward PE 33 is not even cheap. 2.3 PEG ratio. Current ratio, basically revenue growth in the last 5 years, we're looking at about 15%. Current ratio 1.9, which is good. Profit margin, return equity is excellent. $57 billion of free cash. Total return in the last 5 years, 10 years, we're looking at about 25%. 13% expected basically earnings to grow about 13%. Then 13% after that. Then basically right now it seems cheap, slightly cheap, 2% discounted. 325. Now, the reason why basically they're saying it's a little bit discounted right now is because obviously of this type of growth, okay, double-digit growth. But this is ridiculous. I mean, I've seen about this company trading in the mid-20s not long ago. So this is expensive. In my opinion, that's definitely expensive. Next one is AMD. It's another one that came out recently and said, yep, we are producing chips that will actually use AI. This is how we're going to use it. And basically the stock price went to the roof on that day. I think it was like 4 or 5% up on just on that day. 117 billion market cap. It has narrow economic, $105 per share. 438 PE. Is that even correct? Yeah, the formula is there. Wow. 36 PE for forward PE, sorry, and PEG ratio just above 1. Revenue growth in the last 25 years, we're looking about 37%. Current ratio 2.4. Profit margin almost non-existent. Return on equity basically is non-existent as well. Free cash flow 2.5. In fact, I want to check this if that's actually the truth. Yeah, you can see profit margin there and then return on equity almost there. Wow, that's crazy. Right, because sometimes I need to check this because this data comes from Vinvis, but I just double checked with Yahoo Finance. But yeah, total profit margins, return on equity almost non-existent there. Free cash flow $2.5 billion. Total return in the last 10 years 38%. Next year they're expecting 43% growth, almost 44%, 7% after that every single year. 8% discounted right now, $115 per share. That's where the price should be. Really seems expensive when you look at the PE ratio, but look at that growth. This is why people are paying higher multiples when they know they're gonna make money. They're expecting the price of this company to be like 200, 250, so they can sell it high because this type of growth. So if they come out and the earnings basically gone up about 10%, 15%, whatever it is, the price is gonna go up. That's what they're betting on. Okay. For the long run, they might make some money, but if that doesn't happen, if this is basically based on speculation, remember that, okay, the analysts do not have a clear idea of what's going on in the companies, okay? So Tesla is the next one, obviously one that has been using AI for a long time, the one that has actually, Elon Musk came out recently and said, stop the generative AI situation that's going on, let's pause it, let's basically create rules and expect basically things. Apparently, he actually paid $50 billion to the OpenAI ChatGPT company, and they used his money because he wanted to make it open source, which is free basically. And now Microsoft bought it for basically investing about $10 billion. They started making money, and he's like, hold on a second, how does that make sense? I thought you're gonna basically make this free, but apparently that's the problem between him, the Sam, whatever his name guy, and Elon Musk are not really good friends anymore. But yeah, there we go. Tesla's been using AI, and I'm sure their cars are full of AI technologies in there. 571 billion market cap. It has a narrow economic moat. 180 is where the price is at right now. Trailing PE for Tesla is not bad, 53. Forward PE 51, so not much of a difference. PEG ratio is above 1, which is just above 1, which is okay. Revenue, we expect basically the last 5 years is 48, let's call it 49%. Current ratio above 1. Profit margin, return equity is getting there. Free cash flow $5.78 billion. Total return in the last 10 years 40%. Next year they're expecting the earnings to grow about 41%, then 11% every single year after that. 16% discounted right now, $215 per share is where the price should be. Next one is Adobe. Adobe is one of the companies that came out recently and said, you know what, yes, we are using AI, and basically they have a software now called Firefly, and you can literally, like you've just seen here, you write the description of what you want, okay, and you can make change. You can change the background. You can actually write, create me basically something that shows a sort of a different landscape if you like, and it will do it for you. It will literally create everything in seconds. It's absolutely amazing. All of these things is just created using AI, and I think if basically going forward, a lot of the artists are probably going to struggle with this sort of a software being available to us. And this is why people are saying AI is dangerous. We have to like start basically moderating it or whatever it is. Okay, so the US are fighting with these companies to make sure that they don't do anything stupid with it. So there you go. So these are basically what Adobe can do right now. So $170 billion market cap. It has a wide economic moat. Price is $371 per share. Trailing PE is 36. Forward PE, we're looking at 24. PEG ratio 1.5. Revenue, basically in the last 5 years, grew about 19% on average. Current ratio above 1. Profit margin, return equity is excellent. $7.3 billion of free cash flow. And then total return in the last 10 years, we're looking at about 23%. 24%. Next year, they're expecting the earnings to grow 14%, and then 14% every single year. After that, 23% discounted right now. $425 per share is where it is at. Now, every single company that I've shown you have now a positive PE. Okay, so they have a price to earnings, so they have a positive, they're making money basically. That's what I'm trying to say to you. All of these companies do have an excellent free cash flow. Okay, they're returning a lot of money to their customers. They seem undervalued, majority of them, apart from Nvidia, which has been going up for a long time. The PE, you can't just say, oh, every company has to be forward PE, basically forward PE or 15 or current PE or 15 to 20. It doesn't work that way anymore, especially with technologies. Okay, if you want a good companies, whatever, you have to pay the price. Obviously, if you're not comfortable with that, you're just going to have to make your decisions. But I understand 438 PE is very, very, very high. Okay, but at the same time, that's what basically people are willing to pay. That's the risk people are taking. This is why you need to, when it comes to investment, you have to basically know your risk and appetite. Now, the final company I want to show you is a little bit speculative. This company has, it is ticker simple, okay, AI. They've been around for a few years, okay, C3 AI. This company is supposed to be the AI company. Only 2.8 billion market cap. The reason I've included this company right now is it is quite speculative, and a lot of people are saying so. It hasn't got any moat at all. The price is okay. It doesn't have any PE or trailing PE or big, none of that exists right now. Revenue in the last 5 years, they grew at about 36% because it's a newer kind of company. Current ratio is actually good, so they've got enough money to cover that liability, if you like. But profit margins and return on equity is absolutely non-existent. They have zero free cash flow. In fact, they basically minus free cash flow right now. And then total return in the last 1 year, not 10 years, okay, is about 40%. So they're expecting 30% growth next year, and then 51% after that every single year. 13% discounted right now, and $33 per share is where it should be. So it's about $8 from where it is right now. So this is kind of the speculative companies that are out there that people are pushing for us to invest in. And this is why I really need you to be careful, because if you did invest in this type of business, okay, although they have AI as their ticker symbol, right, unless you understand the business model inside out and you know how they make money, and none of these companies can take a basic market share from this company, and you understand basically where it's heading, and this is, you expect that definitely to happen, or at least I'm very much sure, then you would have to stay away from these kind of companies. This is the kind of companies I will definitely not invest in right now until it becomes maybe a little bit mature, proves itself, and it takes a market share. I want to see basically what this company can do in the market before I would actually invest in. However, I would not hesitate to invest in any of these companies. In fact, I've got shares in Adobe. I used to own Tesla, I used to own AMD, I own Microsoft, and I used to own Nvidia. All of these companies are solid business, very well known. And look at the market caps. We're looking about from $2 trillion to $170 billion dollars. Okay, so they are huge companies. So please be careful. Don't follow this speculative stuff that's going on. Don't listen to the pharma companies that are starting now using AI to come up with the new cancer drugs or whatever. Don't listen to the penny stocks, whatever. Just be careful. That's my message. That's 5 companies that you could potentially invest in, inshallah. Again, this is not financial advice. I'm just giving you some information. Have a wonderful day. Assalamu Alaikum.